Welcome to Beyond the Numbers. If you find these videos helpful, please like this video and subscribe to the channel. It really supports our team. And if you'd like a heads up when we share new updates, tap the notification bell so you don't miss what's next. We appreciate your support. With that, let's get started.
Well, hello again, Solis Wealth family. Greg Solis here with the update. First of all, on the family front, well, we went to Cabo on our family trip. It's an annual trip now that we've probably been doing for 20 years or so. And oh my gosh, what a great time we had. I'll tell you what, my family is a lot. I don't know if you do family trips with your grown children, but I'll tell you, it's a lot with all those 20 somethings and now we have significant others that are coming with us, but just a great time. Spent a lot of time on the beach, played a little golf, going out to nice restaurants, having dinner together, breaking bread together. Yeah, we just had a blast. So it's been a great summer so far. Super hot here in the desert. Don't come to the desert this time of the year. It's brutal, but I hope you and your family are having a great summer as well. Well, market-wise, well, frankly, things are cranking along pretty good. As a matter of fact, as I record this last week, we hit a couple of all-time highs on the S&P 500 and the Dow. Both of those broke through their all-time highs, which is great to see. The Dow was really strong. We've seen some rotation to some of these other industrial stocks, which is good to see. And so it's pretty widespread. The NASDAQ didn't get quite back to its all-time high. It's still off about 3%, but it had a huge run-up. So it just hasn't quite gotten back to where it was. But what's going on? Well, earnings season has been incredibly strong. As a matter of fact, as I record this, about 75% of the companies have recorded their second quarter earnings, and over 80% of them beat earnings expectations. And we had high expectations. As a matter of fact, year over year, the S&P 500 earnings are up about 31%. This is huge. This is a historical move. This is one of the biggest quarters and biggest years ever, and specifically the second quarter was one of the bigger quarters that we've had. That's why we're getting this move up in the market. It's just been pretty extraordinary. The good news is it's not just the Mag 7 anymore. We're seeing a lot of the other companies participate in this earnings momentum. So all across the board in different sectors, we're seeing a lot of strength in corporate America. That's what's driving this market. However, we still have some concerns out there. Some of the challenges we have that are worth keeping a good eye on is higher oil prices. Obviously, the geopolitical issues that we're dealing with and the tensions in the Middle East and potential higher oil prices can create a problem. It creates inflation, as we've been talking about. And so this is something we have to keep an eye on. If we could get that stuff behind us, it would certainly do well for the markets and the economy overall. So we're keeping an eye on that for sure. The Fed, we're not sure what's going to happen here. Again, as we see inflation kind of trying to kick up, the Fed's going to have to be real careful with that, and they might want to raise rates. On the other hand, if we see jobs continue to weaken, then of course they're going to want to lower rates. So it's still a wait and see right now. We're not exactly sure what direction the Fed's going to go, whether they're going to be increasing rates or lowering rates. But that's a big deal that we're going to keep our eye on. The bond market has struggled a little bit with some of these geopolitical tensions that we have. As a matter of fact, if you look at the 10-year Treasury, back in February, we were down below 4% on the 10-year Treasury. We're all the way up to about 4.6% thereabouts. 4.6, that's a big move. As a matter of fact, the aggregate bond index has moved down almost 4% since February. That's a pretty big move. So we've had a little sell-off in bonds with the rates going up. If we get some of these tensions behind us and oil prices come down, we should see interest rates begin to come down, which pushes the bond prices up. Remember, when interest rates go up, the value of bonds go down. When interest rates go down, the value of bonds go up. So that's been a headwind for us for sure. The bond market has been challenged a little bit with these higher oil prices. But overall, everything's been moving along quite nicely. And by having a properly diversified portfolio where there's counter correlation, in other words, when we got some asset classes that are going down in value, we got others going up, that counter correlation helps smooth out the ride when we deal with some of the volatility that we've been dealing with. So overall, everything looks good. If there's questions, concerns, or anything else we could do for you, never hesitate to call. We're always here for you. My very best to you and your family. Take care and God bless.